The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to change the format here just a little bit today. This is the anniversary of the stock market high in 1987, before the big crash of 1987, which represented the biggest buying opportunity since 1982. The first graph you're going to see here comes from our good friend Norm Winsky. It's his planetary aspect forecast. And folks, he's done a terrific job. I think it was worthy to put this on. He does a good job all the time, but this month has been extremely good. You can see the lunar eclipses and the solar eclipses and the Mercury going retrograde, and now we have Saturn coming into direct today. So I've always had a dream that someday there'll be a whole segment on CNBC or Bloomberg, a 5-minute or 15-minute segment on astro cycles and how they affect the market with new moons and full moons and some of the other things. But whether that happens, that's on my bucket list. I'm not sure if it's going to happen or not, but that's something that I always hoped. This was 30 years ago. Today I was on the show at FNN, which is Financial News Network in Los Angeles. That was a Merrill Lynch project with Glenn Taylor, and Glenn Taylor's fiancée was none other than Sue Herrera. And, of course, they went bankrupt a couple years later, and then Sue moved to New York to reconstruct it as CNBC. But on that show with Bill Griffith, who had invited me on several times over the past year, I was talking about a potential high in the stock market with a drop sometime where the Dow would be down more than 300 points during the month of October. And all I did was I took the largest drop that we had had up until that time into the August 25th high, which was 191 points. I multiplied it by 1.618, and I assumed that we would probably have an expansion of that. And, of course, it opened down that much on that fateful Monday. This the 19th of October, but it was a very exciting time. I still have the tape of that show. One of these days I'm going to have to resurrect it, but it was a memorable day for me. At that time it was the end of the summer, and I received word from my youngest daughter, those 5 wonderful words that every parent likes to hear, and that is, "Dad, I've been accepted to Harvard." And I said, "Oh my goodness." So luckily I had bought October puts, and they paid for that education. But the problem was I bought October puts, and they expired on the 16th of October, and the Dow was down 106 points that day, and I was happier than a pig in what. But I'll never forget that. Ed Horowitz got married on Saturday in Los Angeles down at the Bel Air Country Club, and we were there for his wedding, and I was just all excited about it. And Ed said, Larry, he said, "I'm afraid this thing's going to come unglued on Monday morning." And indeed it did. So the difference between what I made on Friday to what I would have made on Monday was 10 times. So anyway, it was good. And let's get on to the next one. We've had a request to take a look at the euro, and we should, with the Federal Reserve there in Jackson Hole, Wyoming. I'm sure they're doing wonderful research, and so we'll see what's going on here. But we'll take a look at the euro, because what I've done here is try to predict what would happen, with the euro, given the fact where we are. You see, we've been in this trading range for the whole month of August between 119 and 116, and we're in the middle of the trading range right now. Now, you notice that we could easily make it up to the 78% level at that 118.60. That would complete an ABCD at the 78% level. But the one that looks the most interesting to me would be the one where we would come down about 60 to 80 pips down to this 117.30 level. That would complete a very nice ABCD at that point. And you would also have a very nice head and shoulders pattern forming at the same time. And that's what I that's what I was looking at, and I tried to assume what it was going to do, and of course we assume, you know what that means. But that's what my game plan is, to see which one it's going to hit. Maybe it hits neither. I don't know. It could be a non-event. That happens also, but it also might be a surprise, or we don't know. I'm just giving you what I think could happen. Remember, that's just an opinion. So what we'll do is we'll revisit this on Monday, you know, to see if it was correct or not. But it's very interesting about this euro. Now, the euro is by far, folks, the best thing to trade. If you're new to trading, you should really look at the euro. It's far better than any of the stocks or stock indices or bonds or anything else. It trades 24 hours a day, 5.5 days a week. The volume is thousands of times bigger than anything you could even imagine. And the liquidity is, you know, unbelievable. And the fills are, you know, pretty spectacular too. So it's really the best way to trade. Since we're talking here about the currencies, there's a lot of things happening that are important today, especially in gold and in bonds, and then also in the copper market. But we want to take a look here at another currency that's been in the news for quite a bit. This is the old Brexit play with the British pound. And if you notice, the British pound since January has made these corrections. You'll see these last two that we had. They're in the red lines that you see. I've just marked those to show you that those were equal, and we're coming into a 78% retracement down here at this 127.40 level. So that's about a 60 pips from where we are right now. That also says this market is oversold in an up market. And if you'll notice that the 382 from the January low comes in at that same level. So that's another one that looks very, very interesting. Again, we will revisit these on Monday to see, you know, whether we were right or wrong. And that's, you know, basically what you have to do, because some of the patterns don't work. And that's the real key, you know, to watching one. And we have one other one in the currencies, and then we'll get to one of these patterns that didn't work. We have to go over that, of course. But we'll look at the last one we're going to look at here is the Canadian dollar. Now, this is a 4-hour chart, because the high on the Canadian dollar came in at the 140 level, and then the 78% retracement came in at 138.60, and here we are at 125. Coming off of a low of 124. So this is a very powerful number coming in here. And if you look at it over a period of the last 2 weeks, you'll see a really nice 3-drive pattern forming down here also. Now, this is very close to the spot on price of, you know, 124.95. So we'll watch this very, very closely also. We don't have enough time here to move on to some of the others I want to cover when we get back. I would like to cover a little bit about what's happening in this hurricane thing with these not natural gas, but gasoline futures, crude oil, and heating oil, how they're responding to this news of a possible Category 3 hurricane coming through the Gulf, because that affects the refineries all through Texas and Louisiana. So we'll take a look at that when we get back from this break that we have. And then we want to look at bonds, and we want to look at copper, and especially gold, because gold's looking very interesting.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. And Norm Winski happened to be listening to the show, and he was kind enough to send the transit chart for August 25th. And I am going to, I think I can put that up. Yes, I can. I can do it. Hold on. Oh, I think I can. Let's put this up here, and we'll take a look at it. You'll notice here how most of the planets were in these two major houses. And if we looked at March the 5th of 2009, they were all in that top house. So that's what these things are saying. I don't understand the whole thing or not. All I know is that it's pretty good. Hey, we got a caller on the line from Palm Beach. Jack, are you there?
Yes, sir. How you doing?
I'm still above ground, staying away from open graves. What can I do for you, buddy?
Well, I enjoy listening to you, and
thank you so much.
Your experience, and I was so upset because I tuned in just as you were finishing your story about the puts. Mm-hmm. And I had been in actually just 10 minutes ago, prior to that, on the phone with a broker trying to get some index puts expiring in October. I think this year they expire October 20th. Mm-hmm. And I was wondering what your opinion was of the best index puts to have in case of a market event of some sort. Mm-hmm. What would be your recommendation?
Yeah. The best ones to have, Jack, are the ones that go down the most. Unfortunately, that's beyond my pay grade. But what I can tell you is I think the ones that have the biggest chance of dropping the most because they've gone up the most are the NASDAQ. So right, I would be looking, and October is a great strike, the 20th, because 55 days from the high of August 8th takes us into August 2nd or 3rd. And if I'm right, this is a long shot, but it's not working. So we'll see if it's going to work. But the good part here is you don't have to put up very much to see if you're right. This is almost like betting on that other guy in the Merriweather fight, but not quite that good because yeah. Anyway, that's what I would look at. I would look at the NASDAQ.
I was looking at the Qs, and but then we have to go 135, 125. Would you have a favorite target? I think it's something like 142 right now.
Well, I think 125. Your 125 put's not going to cost you very much. I mean, It should be just a little bit. If you have to pay a little bit more to get to 135, I would do that. What I did, I bought October puts 20% out of the money, and they dropped a whole lot that just on that one day. So, but that was on the 16th, and the next day they dropped even more. So that's the way I would play it. But you don't have to risk very much at that point. That's and again, this is a big long shot. This is
yes.
It's a big long shot, but it's not like betting on the second coming of Jesus or anything like that. But it's still a long shot.
Well, I appreciate it, and no, I think it's worthwhile insurance, and it's relatively low priced right now, so it seemed like it would make a lot of sense.
Mm-hmm. Well, we're going to find out for sure. Hey, I appreciate you calling in, and thanks for the kind words, and I'll get that check in the mail just as soon as I'm off the show.
Have a good
Okay,
one.
Jack. Bye. Yes, thank you very much. Okay, folks, let's get on here to the weather in the Texas Gulf here with the hurricane coming. First of all, we'll take a look at crude oil. You can see here, crude oil, this is as we were Friday, and we backed off over $1.50 a barrel since then. We're trading at about a buck barrel lower right now at 47.73. You see it has not reacted very much at all to this, but the one that has reacted and has been, moving the market, a great deal higher is the gasoline futures. Those are the ones that have been, really rocking and rolling. And we'll put this up so you can take a look at it, because this is where the refineries are getting hit and they're not able to get the gasoline out to the folks. It's a short-term phenomenon, but when it does happen, it can be very, very dramatic. Now you'll notice that we did take out the highs of May, June, and July. We have not taken out the March highs as of yet, but if this hurricane gets any worse, you're probably going to take those out also. But then as soon as that hurricane passes and those refiners come up, they'll still be okay. And some of the refiners, I listened to Bloomberg this morning, and some of the refiners were not even closing down, that they were going to operate, all through that time frame. So that'll be a very interesting one, to look at. If we take a look at heating oil, you'll notice that this is up to date, and you'll notice that it has continued to move a little bit higher, and it's gone up into this area of we're trading about 165 right now in the heating oil. That's up from the low we made at 156. So that's still acting okay. It's only the crude oil itself that has been acting slower and slower. So I think that's something that we might want to really think about. Let's get on to these precious metals, folks, because there's something interesting happening in the gold market. I want to bring this up to you and point it out to you, because over the last 2 days, we have reversed in the XAU. We have gone above that trend line that's been down since April. We've closed above it 2 days in a row right now. As you can see here, we could have an easy ABCD pattern taking us up another 4 or 5%. That would certainly take gold way above the 1340 level if that was going to be the case. So it's going to be really quite interesting. As we mentioned before, this gold has been in a very, very tight range, for the last, this is the fifth day now that we've been in this really tight range. It's beginning to look a little bullish, folks. It really is. And if we take a quick look at platinum for just a second, I know that's a sister, and it's a certainly lagging sister, of course, but you'll notice that platinum, after it made the a little above the 61% retracement, we had a nice back off. And again, you'll see over the last week, almost last week and a half, we've been trading in a 10-day narrow range, 10-ounce range in platinum at a very high level. That's not bearish, folks. I mean, that means the market's absorbing a lot of selling. At least that's the way that it appears to me. And I'm not sure if that's right or not, but it's beginning to look a little bit. Longer term, I've been very bullish gold for a longer period of time. But when we took out that high at 1307 and then backed off $20, it was a little skeptical, but look where we are now. We're back within a heartbeat of taking that out again. That's not bearish action, in my opinion. So I think it's something that really deserves our attention, because this next breakout above 1307 should be valid, and it should start to have a pretty good run to much higher levels. if that is the case that we're watching. So silver is still lagging, of course, but it's still trading above 17 and change now. So that's not very, that's only 30 cents from taking out those old highs. So all of those things are telling us that we've got a possibility here of making a pretty good run in the gold and silver. And we're going to have a break here pretty soon, pay a few bills, but we're going to look at copper, because copper has broken all of those numbers that we talked about this week, folks. We were looking at that $3 a pound level. We broke about 5 cents from that level, and boy, we turned around like a rabbit on Wednesday and Thursday, and it has really broken out to the upside. So, we mentioned that if it gets above 303 in that September copper, it's certainly off to the races, and we've hit 307. So we'll be back and talk about copper after this break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I have to admit, I've been doing this show for just 10 years. I think it's 10 years in, right around August. No, I think it was September. Well, pretty close. Anyway, so someone just we were talking about the gold, and all of a sudden it jumped almost $10 an ounce, and someone made the comment, someone was listening to me on TFNN. Folks, that's about a far-fetched thing as Merriweather losing the fight, whenever the fight is, but and I wouldn't be surprised if he does, because things like that seem to happen very strangely in boxing, but we'll have to wait and see. I have absolutely no interest in that kind of stuff. I don't like those things. I don't understand how humans can be so, well, never mind. Let's get off the soapbox and let's get on to a few things that we really need to talk about. One, of course, here is the Treasury bonds. We want to look at the bonds here. First of all, we're going to take a look at them two different ways. First, we'll look at them here on the daily chart. You can see this area of 156.20 that we talked about several times. The market should be topping. If you look at this cycles that we had from May through July, the cycle could crest to the right of this. That's where we are right now. It could be any day. We could easily go higher. So pay attention to that, because it's going to be real interesting with the Fed in there today. Now, if we look at the shorter term daily, just blowing it up a little bit, you'll see, let me get this put up here first so we'll all be able to see it. Hold on one second, boys and girls. You'll notice that this 156.20 level has been very, very tough to get through, but with the Fed in there today, it could easily pop through there, and we could possibly make the 158.26 level, which would be a three-drive pattern, and that's one that we'll be watching with a great deal of interest, I think. So that's the main thing to watch. Regarding the crude oil, someone's asked a question about how the market's responding to the news. It's not responding to the news, folks. The gasoline futures are, but the rest of the crude oil complex, the father of the complex, the crude oil itself, is just not reacting very well at all. It's trading around 47.60 or so. And, the others are breaking out a new high. So there's a total difference, and part of that is if someone is short the gasoline and they want to cover, believe me, the people that are on the short side are hurting because the longs are holding out and they keep raising their bids, and that's what pushes the thing into new high ground. So that's a key thing, to pay very, very close attention to, as we look at these. All right, let's take a look here at the copper, because this is one that is flat out has broken down. Let's just look at it as we were watching earlier this week. The copper, the 382 came in at $2.98 a pound. The 786 came in at $3 a pound. The 61% retracement came in at $3 a pound. There were three major ratios in there, all from yearly highs going back a long way. And as you can see here from the chart that I'm going to pull up today, on the shorter term basis, the daily chart, you'll notice that the copper has just literally popped through there with a lot of gusto. We got up to 307 in the September copper, which is certainly a breakout to the upside. Now, the only way that this would possibly be a high is if thing would reverse in a day or so. I mean, like maybe Monday or Tuesday at the latest. In other words, this would be a potential false breakout, but don't bet your last pennies on, potential breakouts, because those will take your pennies and you won't have anything left. So watch it very, very closely. The target on this would take it to 311, which would be the larger ABCD pattern in that program. So remember, when we're doing these patterns, they do fail. They work sometimes, but they do fail. And those are the ones that you have to try to protect yourself on. Admit when you're wrong. And there's no mistake in being wrong. The mistake is in staying wrong. That's where people get into, a great deal of trouble. And I think that's something that will be, something. By the way, I will cover natural gas coming up at the break. One of our friends from Canada will be watching that, and we'll take a look here now at the wheat market, because we're going to look at Minneapolis wheat. The Christmas wheat, December, got down to the 426 level. We're trading at 436 right now, and as you can see here, the Minneapolis wheat has tested the 61% retracement 4 times now. over the last 2 weeks. So that's a very, very important level on Minneapolis wheat. That's the one, the northern wheat, and it's going to be hard spring red wheat, and that's the one that has got a real chance for any type of a bull move. Any move below the 650 a bushel level in the Minneapolis wheat would not be a very good sign. But the fact that it's hit there 4 times in a row over the last 2.5 weeks is a pretty important point, as near as I can tell. That's it. That's really what you want to be, really what you want to be looking at. All right. Now, next question that I want to cover is, or next thing I want to cover is the VIX index. We're going to take a look at it here because we've got some interesting patterns here on a little bit shorter term basis. You'll notice here, this is over the past 5 months. We do have a 135 pattern coming in here with the VIX index, and that's around the $11 area. We're trading at 12 and change right now, and that's a small amount of change, so we'll see how the market's going to follow through here. We are going to cover the, well, we might as well do it right now because the show is moving along quite rapidly here. And we'll start off with the, I guess we'll start off here with the A-mini S&P and let it see what we're seeing here over the past time period over the we had the lunar eclipse back on the 7th. We had the solar eclipse on the 21st. And you see what we're doing now is we're making a 135 pattern in here. We're trading at, I think, 24.47 or something like that this morning. We could easily move up 15 points to the 78% level at 24.62 today, given the fact that the Fed is out there, doing their thing. And that's a very, very strong possibility that we could be getting to that level. We're trading at that. Well, we're trading at 24.47 right now, so we could really watch it. Folks, keep a really close eye on this gold market because, we just popped $10. We backed off about 5 of that. But if we can get above 1302 today, that tells us that we're almost ready to break out. And I don't like to follow those breakouts, but pay attention. We're also, trading in the bonds at 156.11. That's only 10 pips away from the, that area of 156.20. So there's going to be some fireworks, I believe, with the Fed here today because these markets are coiled. You see it in gold. You see it in a whole bunch of other things. You see it in bonds. So that tells you there's probably going to be some really wild action during the time that she starts to, to give her speech. What the speech will be about, heaven only knows, and we don't know how that's going to turn out. But that's what we're watching here when we're taking a look at this S&P 500. Okay, we'll take a little break here. We're going to come back and we're going to look at the New York Stock Exchange Index, and we'll be right back.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Now, this market is acting extremely weak. If you can see, or this since August the 7th, when we had the lunar eclipse, we've only made a 38% retracement. That's quite weak, I would think. And if you'll notice, the last two retracements, if you look at those little red lines that I have there showing the equal moves, that's pretty much what we're looking at today, coming into Fed time. So, pay attention to that. I've had a question from one of our listeners. Does the Fed trade on inside information? Gee, I wouldn't think so. Anyway, if you go back to the early years of Alan Greenspan, if you follow his career at all, one of his very best friends was, and still is, Robert Rubin, who was the chairman of Citibank, and then he was also the Secretary of the Treasury for a time. But when he was at Citibank, every time that Greenspan was in New York, they would have breakfast or lunch, and I believe they even vacationed together at times. But I'm sure at lunch or breakfast, he would say something like, Greenspan might say, gee, I certainly wouldn't want to be short bonds today, or I would really like to be long the S&P if I traded, but of course I don't. So anyway, we'll see what's really happening. So we'll see what's happening, what's going on right now. Anyway, we'll just do one thing at a time here, like we try to do here. You can just see what happened in gold, folks. We went from 1302 when someone had the big buy-in, and look where it went down to, 1282. It dropped a quick $20, just faster than a speeding bullet. Now, if you think these markets are not nervous, that's the main thing. That's why the importance of these breakouts, they've got to stay above there. These markets are just very, very nervous. I mean, this narrow range that we've had in gold for the last, how many days it's been? 1, 2, 3, 4, 5 days in a row. We just took out both sides of that range in a matter of 5 minutes. So if you think these markets are getting a little illiquid in gold, take that to the bank, because you don't see that in the currencies very much. Like the euro has been in a 25, 30 pip range the whole time, whereas gold been in a $4,000 range, 2,000 up, 2,000 down. So that means that the people were not really listening to me about buying the gold. I don't know, but they're very wild. The one thing about this morning is if you look at this chart, I think I can put this up without too much trouble. You'll see that it hit. Just to show you how these numbers really, really react nice. And believe me, we'll put these up here so I can. I've got to. What do you call it? I've got to put a little reminder here to see what it is. It'll only take me about 7 seconds. Now there's 5, 4, 3, 2, 1. Let's get it up here, and then you'll be able to see it without any trouble at all. How the market, there it is. Here's the gold market, folks, and we're the last 5 minutes. I just want to put this up here to show you what's happened. You'll see on the upside, you see it made a almost a perfect 1.618 off the high from the 23rd. And it made a 1.618 off the high or the low of the 24th, which was also a 127. You see how both of those numbers came in at that level? Those are just major support numbers in gold. Now, stop and think. 10 minutes ago, well, yes, 10 minutes ago, gold's trading at 1297. Now, do you have the courage to put the order in to buy it at 1282? To even think that it would drop $15 in 5 minutes? Hello, operator. Not many people did that. Now, ask me, did Larry do it? No, I did not. And I saw it happen after the fact, but I didn't see it happening before the fact. All I know is this trading range we've been in for 5 days has now been violated on the upside and violated on the downside. What happens after this is what really is going to count. Because if you look at this really close in gold, from the high we made at 1307 to the low we made down at 1285 to the high we made at 1302 to the low we made at 1282, both of those swings down from the 18th was $20, and the move today is $20. Now the one today, happened in less than a half an hour. The one on the other day, it took almost a whole day to complete, but it has completed. So what it does after today is what's going to be interesting to see if it continues on to this level. That will be the main thing, to pay close attention to. We've got to do the bonds here shortly, but I did want to cover for our good friend up in Canada, Mikey, to cover the natural gas. And we'll put this up. You'll see here that natural gas had a really good buy signal, just missed by about 2 cents at the 78-cent level. $2.78 level. And here again, we've been in a really tight trading range for 10 days. Just basically at a higher level, we're above the 61% retracement, but if a really tight trading range. So whatever range this box, comes out of, above $3 or below 283, that would tell us that that's most probably the area that we're going to be, looking at. I don't know if natural gas has any effect. Well, it shouldn't have any effect on the hurricane coming in, and we'll have to see how much damage the hurricane really does to see what goes from that level. I wanted to go a little bit more in the Treasury bonds and Treasury notes by looking at the TLT. We'll show the TLT here in just a second. You'll notice that the TLT is right up here at the 78% level, and we're doing the same thing in the notes. The notes are lagging the bonds really badly, which they've been doing for quite some time. So that's what the TLT looks like. If we take the other side of this, which is the TBT, and take a look at that, you'll notice that we have some ABCD structures down here at this level, a little below the 78% level by about 10 cents, which isn't very much. So this will be a key time frame today in what the Fed is going to do. And I don't know if you folks know this or not, but the Fed employs over 200 full-time traders that actually trade. You'll never hear of these guys in the news because when you get a job at the Federal Reserve as a trader, you sign a contract that basically says that if I open my mouth about what I'm doing, I'm in big trouble. I only met one person in all of my years doing this, and that was on the floor of the exchange. The young man worked there for 18 months at the Fed. All he did was tell me that he worked there and that he did some trading. Nothing that. He wouldn't give me any more information about what he was doing or anything like that. But I do know from very, very close personal information, and this is unauthorized sources, I'm going to say, back in 1978, during my years at Drexel, I met a couple people through my good friend Jay Cross who were employed by the CIA. And one night when we were at dinner, they had a little too much to drink and they laughed about it and said, if we can read a warning sign on a package of cigarettes from 5 miles up, we can certainly see what's happening to a coffee or cocoa crop in Africa without any trouble. And maybe we could even fund some of our clandestine operations by using some of that money. And end the story. So I don't know if any of that's true or not, but it makes for a good book, and I'm writing it right now. I'm on to the title of it. I'm still working on the title. I'll be happy to entertain any suggestions that you might have. So anyway, we'll move on and look at some of these other things. By the way, if you want to see a great old movie, it's called Rollover with Jane Fonda and Chris Christopherson about the Federal Reserve and stuff. It's really quite exciting. It's got all the things necessary to make it a good. I don't know why they never came out with a sequel of that because it was a fabulous movie. Okay, let's move on to the next one here. We got a break coming up for just a second. I still want to talk about the Dow Jones here. This is from last Friday. And I want to put this up here. Yeah, Marshall, you flat out got that right. That'd be a great title. He's saying the title of the movie would be BS by LP. This is very good. I like it. I get accused of that a lot, Marshall. Okay. Anyway, if you look here at the Dow Jones, we're still, looking for a low coming in, sometime in October. This is similar to what we were seeing in the Bradley model in 1987, and very similar to the one that we had in 2007 too. Which is, very interesting. But again, it's just very interesting. Doesn't mean much. Take a break. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi folks, the 800th edition of the Gold Report will be published next Monday. To celebrate the last 15 and a half years of calling the gold market, I'm doing a special promotion. You can receive 60 weeks of the Gold Report for only $600. That is $10 a week, which is a savings of 50% off the regular price. If you want to understand the entire supply and demand equations that move the gold market, including where the XAU, HUI, and mining equities are looking to trade, if you want to understand the correlation between the dollar, the yen, the South African rand, bonds, and gold, the Gold Report is for you. I'll give you the entry price target, and stop for each equity, ETF, future, or option trade. The Gold Report is a long-term newsletter with the focus on building real wealth to a successful portfolio of gold and silver equities. You can take advantage of this special promotion until August 27th. That's 60 weeks of the Gold Report for $600, which is a 50% savings. Go to the front page of TFNN.com or call 877-518-9190 and order now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to put the chart of the 15-minute gold chart. You'll see that we just made a 78% retracement down there to 1282 level. Well, 1281 was a low. Evidently, from what I'm listening to in the den this morning, there was evidently a huge number of gold contracts for December that were dumped all at one time. It looks like 22,000. I don't know if that's the correct figure or not, but that's a huge amount of contracts. And of course, the market can't take that, especially early in the morning. You know, that's pretty much what you're looking at, which is different. That's why it's much easier to trade foreign currency than it is some of these commodities, because you don't see that. You see it occasionally, like in the Swiss franc a few years ago when they basically robbed their own bank. Well, they robbed everybody else's bank, and but those those things just don't happen too often, but they certainly did. That could be it. I think Tom O'Brien was unloading some of his gold. That would certainly make good sense for sure. All right, folks, we got the weekend coming up. It's going to be really interesting. We have some very important stuff. Remember, this is the anniversary date of the top in the stock market at 1987. I don't think it's going to mean a whole lot, but I'm friendly to gold. We'll see how it ends up today. I'm also friendly to silver. We've broken out of that 5-day range. Now, where it goes after that 5-day range breakout is what's important. Just because what happens in a 20-minute period or 30-minute period doesn't mean a lot. It's exciting to watch, but unless you have your order setting in there, it's a pretty difficult one to trade. So, just keep a close eye on these things, because we're going to have some more activity, much like we've had in August so far. We're going to have even more, I believe, in September and October. We've got a lot of things. By the way, we're going to have Shane Smolian as our guest next week. He's got some really great things to talk about, research he's done on the speed of Mercury. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.